All right, can you all see my screen? Let me know if you can see my screen. Cool. And if you answer, that means you can hear me. So we are good with that too. All right. As you all know, I like to trade the S&P 500. I also like to trade US 30. Let me show you something that I use to trade these, and then we'll look at some other pairs and call it a day. Have my man Philly in the house. What's going on, Philly? All right. I always like to start with the daily. This is a markup that I sent to the group last week. I told everybody to enter right here. This was the entry. I don't know who all took it, but as you can see what has happened since I told everybody to enter. How did I know that here would be a good entry? Watch this. This is where price action comes in and utilizing the Fibonacci. If you go back a few months, you'll see that the last high before the big swing was right in this area. Right in here. So price broke out of this area. Then it came back to retest it. Fundamental break and retest, as a lot of people call it. So then we created a new high right in here. And let me clean this up. I'll explain why I had these lines. Let me put them back, and then I'll explain why I have them. These lines right here. So price broke out of this zone, took off, then it came back to retest. Formed a new high right in here. So price broke out again, came back to retest that area. Watch this. If I take using this initial breakout, so let's say I take from this low to this high, take my fib, right here, wick to wick. If you are on the last training that I did on the fibs, I told you guys then, I look for retracements between 0.5 and 0.75. So if you look at all of the moves, so take it from this low, price broke up, made a high, came back to the 618. Wick entry, took off again. So this is the same move. Made a high, came back to the 618, took off again. Made a high, came back to the 0.75 right here where I told everybody to get in. Took off again. Now, I even told myself, if price comes back to this area and does not break below, I will be in this trade for the rest of the year. This is why. This is a key level right here. It's a continual uptrend. Now, this could be forming a downtrend. We don't know, because if you use the trend line from the Fibonacci, it broke below that trend line. Now it could be retesting it. That's perfectly fine. But what I saw is that price never came back to break this current or this swing low here. So it broke out, it came back to retest at the 618, broke up, came back to retest at the 0.75. Now I am looking to see if price will reject around these areas and drop down. If it doesn't, I'll be looking for price to continue up and take, let me show you, let me reverse this fib and take 25% higher than the, I believe that was an all-time high. So this will be a long-term target right here. But all I'm doing is playing price action and the fib. What do I look for in price action? So let's clean all of this up. Let's take this fib off. Not my line, the fib. Let's take this off. Let's clean this up. Clean this up. And again, I need to leave these lines as a reminder to myself to show you all why I have those lines. All right. So when I'm looking at price action, I love looking at these, what I call pairs. This is how I determine targets. This is how I determine entries. This is how I determine reversals, all of that good stuff. So I study these pairs. Here's why I have this line. Let me show you. All right, let's clean this up a little bit. See if this makes sense. So when price made this swing, when price made this short swing into this level right here, we had candle bodies that were almost identical in size. Almost identical in size. I look for those quite a bit. Here's one here too. But anyway, so we had a strong push down, a strong bearish candle, but then we had a bullish candle, a reversal that had the same amount of momentum as the previous bearish candle. When I see those, I don't do limits, but in my mind, I set limits for it to return and retest this area. Why? Because this, in my mind, is a breakout. This is a breakout right here. Let me show you why. Let me put an arrow and turn it. So there's my breakout right here. So I'll put a line, I'll even set an alert. And I'll call it crossing down. So I'll set an alert here. Then I let price do what it does. See, it took off. Played around, came back a little bit, not quite. Took off again, played around. As soon as it comes and crosses this line, I'm on a daily now. I trade this long term. I don't do 15 minutes on the SPX. That's just me. As soon as it comes back to cross that line, there's my trade. That's my entry, literally right here. My stop loss then becomes just beyond the wick of the bearish candle where I set my breakout. So price dropped, then it formed that bullish momentum candle right here and took off. I said, okay, it took off. I need it to come back for me to re-enter or for me to enter. I set my line. Look, soon as it comes down, I'm in that trade. So here it was right here. Look at the distance between where I entered and my stop loss. That's why I told everybody to get into that trade. Right here. Look how much profit you would be in if you'd have taken that. From here. $130 pips on an index. That's equivalent to 1,300 pips on the regular Forex pair. How many of you are getting 1,300 pips in your trades for the week? Drop in the chat if you're getting 1,300 pips on the Forex trade during the week. Anybody? That's the power of learning price action, family. You gotta learn this stuff. You gotta learn it. See, if you trade shorter term, and I'm not telling you not to trade shorter term, but if you trade shorter term, then when you see moves like this on the short term, if you're inexperienced, you start to panic. For me, as long as it doesn't hit my stop loss, I'm still in that trade. Soon as it comes back to my limit line, that's when I take the trade. And look, it took off and came back. I'm not panicked though, because it's nowhere near my stop loss, and it went up. I saw a hand. Come on, come on. That's a great question. The percentage differs when it comes to indices because it's so much of a higher volume. A rule of thumb that I use is my stop loss is just below the previous zone. What do I mean by that? Well, my zone is marked by this pink box. The markets move from zones to zones. So, for instance, here's a zone here that I marked out. Another zone could be this activity right in here. That's why I'm always, when people say this is the best strategy, that's the best, there's no such thing. Whatever works is the best strategy. So this is a previous zone. This is my breakout. I call this a zone. Why? Because price came and toyed around in this area quite a few times. See that? It never broke below that. So that's my next zone. My entry was right here. Come on now. Let me move you. There you go. My entry was right here. Let me change this to blue. Because this is the zone I entered, my stop loss is just below the previous zone. Now, granted, on indices, you have to have a larger balance than if you're trading regular Forex. But if you use, and I'm not recommending a broker, but if you use a broker such as a Fair Forex, they allow you to trade indices as though it were a regular Forex pair. So you could literally trade this with a $100 account. So I enter it on this zone. My stop loss is just below the previous zone. And then as I get into profit, see, my stop loss is not moved right here. I move my stop loss generally when it's approaching another zone. Another zone would be right in here. Once it broke out of this zone, retest, my stop loss is now moved. I move mine just above entry because I want to get a little bit of profit. Now, this is a risk-free trade, so I can ride this trade for however long it takes. If this reaches the next zone, and my next zone is right in here. If it reaches up in here, my stop loss is now just under this zone. Does that make sense? Perfect. Mm-hmm. Right. So when it comes to indices, and this in particular, I study this particular pair. That's why I'm so confident when I trade it. If you've been on my sessions, and Philly has been on for quite a while, and he can tell you, Philly, please stop me if I'm lying. When SPX, NAS, US 30, when they all reach a peak, I tell everybody, if you want to trade the reversal, trade it for 25%. Why? Because it's going to go at least 25% to refuel. I'll show you what I mean. Let's say we would have taken, okay, this trade right here. Let's say we would have gotten in here, and I'm gonna clean this up so it all makes sense. Let's say our entry would have been right here. If I take my fib and I go from here to here, that's the first peak. Everybody see that? That's the first peak. When it starts to refuel, I'll tell people, don't be greedy. Trade it for 25%. Trade the reversal for 25%. There's 25% right there. It came back to 50%. I say just take 25. Right here. That's it. That's a strategy that I follow to this day, to the T. It makes a big move like this. When I see it running out of gas, Doc, how do I know it's running out of gas? Easy. You see these wicks start to form. Right here. And then you see a consecutive string of bearish candles. At that point, trade it back 25%. Here you go. You'd have been out. Look, it came 25% and pushed back up. Then it dropped 50%. I'll show you another one. But this is because I study this pair, though. It's not off a whim that I tell you to do this. I study this pair. Here's another move. From here to here. All right, let's take the fib. Let's go. And by the way, before I do this, learn to recognize this pattern. I talk about this pattern all of the time. Right here. This is a pattern that I look at to enter trades. It's called a morning star. Anytime you have a bearish candle and you get a doji between that drops lower than a bullish, that's a morning star pattern. That's an indication that I can enter that trade. If you'd have entered this trade right here, even on the bearish, you'd have been in, oh man, look at that move. Anyway, let's take this fib from the wick. Remember, if you use a wick at the bottom, use a wick at the top. Let's take it to a wick here. It runs out of gas. Okay, cool. Just trade it for, catch the retrace for 25%. There you go. Works every time. Every time it works. So you have to learn to identify. This is what I mean by price action. Understand the price action of the pair that you trade. I can't tell you what this is on GBP USD because that's not a pair that I study. I can't tell you what this is on Bitcoin because that's not a pair that I study. I can tell you what it is on all three of the indices. If it runs out of gas, you're going to get 25% at least. And something else that I can tell you on the indices, when they make their initial breakout, they retrace generally 100%. Watch. Here's a breakout right here. Broke out, retrace. And when I say 100%, I mean back to the area that it broke out of. Here's the breakout. 100% retracement. Here's another one. Here's another breakout right here. Remember, I look for breakouts when you see opposing candles that have almost identical momentum. Here's a breakout. It almost came back. It didn't, but there's a morning star. You could have taken that trade up. Push up, retrace. 100%. So people say, I missed the move. No, you didn't. You didn't miss the move. It broke out here. It came back 100%. Now, this is the real move here. You take your time. This one explodes. The first move explodes. The second move, it takes its time. So you never miss a move. Whitney, the broker that will take $100 that allows you to trade indices with $100 is Fair Forex. So do your research. But anybody have a question on this? Now let me put my raise back. There was the breakout. There was the stop loss. Here is the target. Here's an intermediate target right here. Why do I pick these targets? Again, I always look for pairs. Pairs. Here's a pair right here. Here's a pair right here. Price reaches this target, my stop loss is way up here. I don't care. Let's say it's $1,000 trade. Let's say it's $100 trade, and I get $50. I'm good. Make sense? So if we come down, I am looking for price to make a reaction right here. Let's see how it does when the market opens, but I'm looking for a reaction here. If it does not react and bounce, now I'm looking for a reaction above. This is the reaction I'm looking for right here. I want it to come up, run out of gas, come back down in these areas. If it doesn't break below this previous zone, then we buy it up. Very simple. But I'm hoping it comes back. I'm hoping it comes back into this area and does not break. If it comes back here and does not break, I'm looking for it to continue up. Let me put my fib back for the target. Let me go the other way. And this is not exact. I'm just putting it up. Here's the target right here. Long term. Here's my long-term target. This is my entry now. Look how much profit I'm in. Here's my target right here. Make sense, everybody? Cool. All right, let's look at some other. If you have any you want me to look at specifically, let me know. But I'm about to mark this up, and then let you guys go back to your days. Okay. So I'm gonna take this one from the breakout here. So I'm using this as my fib. And I have my other levels just turned off. So I'll turn them back on for this. I should have a negative. There we go. There it is, right there. So I'm looking for price to break out of this area and come back to these. So these are my targets right here. So this is a buy entry. If you notice, it broke below the trend, but it pushed back above. So let's see if it'll come back, how it looks when it comes back, when the market reopens. Let's see if it comes back to these areas. If it comes back to these areas and then gives some momentum up, I'm looking for it to push up to these targets above. So let's see how that plays out when the market opens. Nas is similar. See, I already had it marked from, there's my entry right here. And I like the push up because for my head and shoulders traders, it already violated the left shoulder. Philly, could you come on for a minute? Yes, I can hear you. I appreciate you, bro. You know the head and shoulders, right? This is a violation, am I correct? Cool. So there you go. I recognize the head and shoulder pattern, but I don't trade it. So I do know when there has been a violation. So right here, if you were trading the head and shoulders, this is beyond your shoulder. So you should have been either out of that trade or taking it the other direction. Is that accurate? Cool. So same thing on Nas. Let's see what happens when the market opens. I would be looking for it to come back to these areas right here. If it doesn't, I'm looking to push up into previous highs. Notice I never say what the market is going to do. It's what I'm looking for it to do. We don't control the markets. So anybody who tells you that they know, no, they don't. That's like saying you know it's going to snow because the weatherman said it's going to snow. The weatherman doesn't control the weather. So here you go. Here's your area of interest here and here. See what happens when the market opens between or above these zones. If it's above this zone, wait for it to come back to these levels before you get in it as a buy. But these are key levels on NAS. Make sense? And guys, if you have questions, please feel free to hop on. This is not about me. I just want to make sure you guys have a better understanding of everything. If you have challenges identifying key levels, this is what'll help you. Look for these right here. I call them pairs. Look for these areas and look for multiple touches in the same area. See, it doesn't have to be exact. It's not an exact science. You're looking for multiple touches in the same areas. This is the same area. 1, 2, 3. This is the same area. This is the same area. That's why I call that a key level. Once it pushes up, here you go. Same areas. Then it broke out of this area and look, it came back to retest that area. This is what I want you all to understand. When you get trade ideas from seasoned traders and they give you a price as a buy limit or a sell limit, I want you to start thinking more of that zone, not that price. Because I've seen tons of trade ideas that were great trade ideas, and because it didn't hit the exact price, people didn't take the trade. No, you look for the zone. If we give you a buy limit at 153.373 and it comes to 153.80, that's the same zone. Take the trade. There is no exact science to this stuff. As good as somebody may be, it's still an educated guess. So think zones, not prices. Especially knowing that everybody has a different broker. Every broker's price is going to be different, but the zones will be identical. So Antoine, does this help on the NAS analysis you have? Uh-huh. Okay. Cool. Mm-hmm. Mm-hmm. Yeah, I know a lot of gurus. Yeah. They use the previous area on the fib as a stop loss. I don't necessarily. It works in a lot of cases. I just use previous zones. And if my zone lines up with a fib, that's confirmation. Uh-huh. Yep. Imagine if we'd have known then what we know now, we would still be in a trade from 2 years ago. And that's all. If you think about it, especially for those of you who invest, that's all investing is: long-term trades. So when I see quote unquote experts saying you shouldn't be trading, you should be investing, it's the same thing. It's exactly the same thing. You sell your stock when it reaches a high. You buy it when it reaches a low. That's called trading. That's nice. Let's see. Let's look at US 30. Let's clean this up. Key level right here. See, it's bouncing around that level. Came, played around, pushed. Came, played around, pushed. So for US 30, the next area I would be looking at is to see, and this is daily. I'll drop down in a second to see if it comes above here. Yeah, when we drop down to the 4 hour, we see another zone right in here. So if you're a US 30 trader, wait to see what happens between these zones. See if it pushed above or came back. If it breaks down, you'll be looking for one of these. Down, push to the next zone. If it pushes up, you're looking for the same thing. Let it make its move. Come back. Unless this is the comeback, which it could be. See if it push higher. It's going to be interesting though. Trading is risky, just invest. Yeah. Trading is risky, just invest. You can literally switch those two concepts. Investing is risky, just trade. Same thing. All right, let's look at gold. And then Philly, if you have some crypto stuff you want us to look at, it's all yours, bro. Look at the levels I had marked up for gold. See how they're dancing around my levels? I didn't put this today. This has been here for a while. Look how it's just dancing around these levels. So now on gold, right here. If it breaks this, just sell it down to the next level, to the next zone. If it bounces, just sell it up. You can even put one right here. Does not take a lot of pips for you to make decent money on gold. You're talking about $2 to $3 is 200 to 300 pips. Me too. You see all I have here. That's all I focus on. So, Philly, you have any crypto you want us to look at? Guys, if you have any questions, drop them in the chat. If you need some markups, ask. We'll put them in the chat. Other than that, man, y'all have an amazing day. And I'll talk to some of you all tomorrow at 7 p.m.